Good afternoon, everybody. This is the Real Estate Investment Education Club for November 13th, 2020. Today, our guest speaker is Jillian Sedo. She is a lawyer with crowdfundinglawyers.com, and she's going to talk to us about how to raise money for your investment. So if you are looking to purchase a single-family home, or if you're looking to purchase a bigger item, it's always a good skill to know how to be able to raise money. And in a lot of cases, there are partnerships to be had, such as a person who finds the property and manages the property and the person who funds the property. So real estate is not a go-it-alone game. It's a team sport. And she's going to talk to us about how to raise funds. So hopefully she'll join us in just a moment. I don't think we've had a speaker 4 minutes late in quite some time. But she did just email me, and she's got the link, so hopefully she'll be able to get on soon. In the meantime, let me share my screen. We're going to do two new things here. The first thing that I wanted to talk about is if you are not receiving the invites that are sent out automatically from meetup.intel.com, I want to encourage you to make sure that you subscribe to these. I know there are a number of people that are still not subscribers, but show up every week. And we're going to start creating some breakout groups. And we haven't exactly nailed down when the times for these breakout groups should be. But the two categories of breakout groups have been single-family rental homes and then passive investing in apartments or commercial properties. So we'll have a breakout group for both of those going on. And I need to put out a survey, perhaps, just to see what would be the best times for people. Most people that I've talked to are interested in doing something around lunchtime. Some of the people have been interested in doing something after work. I don't know how popular that is, but let me know, and I'll send out a survey shortly so that we can get those scheduled. But again, the two breakout topics are going to be, and these will just be like half-hour discussion groups where you come in and talk about your rental house or your Airbnb in one, and the other one will be about passive investing in different types of syndications, whether they're apartments or retail or office or medical or gas stations. All right, the next announcement is that we are going to run a contest. So our leadership group, or our steering committee, has grown to six people now. And we're starting to have some really interesting conversations and coming up with ways of putting a little more energy into Yammer. And so we're going to be running a contest for the person who is the most engaged on Yammer. So if you're not part of Yammer, and I know 471 people are part of Yammer, at least the part of the Real Estate Investment Club on Yammer. If you're not here yet, make sure that you go here. Just search for Real Estate Investment Club. Once you hit the web.yammer.com site that Intel hosts, and usually Ronan has been great at approving the people to allow you to come into this group in a very quick fashion. I want to shout out to Ronan. He has been excellent at being on top of that. So thank you, Ronan, for that. And for the person who is the most engaged by the end of November, we are going to send you a free copy of David Green's Long Distance Real Estate Investing. This is a really practical book, and I highly recommend it for anybody who's interested in investing in a location that's not their backyard. I listened to it in Audible. It looks like back in April of 2018, and I still remember this is one of the best real estate books I've ever read. So get engaged on Yammer, and by the end of the month, the steering group will come together, and we'll look at all the people that have been participating there. You know, throw out your questions for your refinance, your rental home, whatever real estate topic that you're interested in talking about. And the person who is the most engaged will get a copy of this book in a format of their choice. Is Jillian on the line?
I'm here. I'm so sorry.
Okay, no problem.
I feel so silly. I was in a Skype room and I'm sitting there waiting forever, and then I realized you sent me a WebEx too, and I just
Yeah,
I'm so sorry.
that is my fault. I have an automated email that's sending out a Skype link, and I've actually looked. I need to figure out why it's still being sent because I've tried to cancel it on multiple occasions and it's still being sent to people.
I just didn't even
Um,
realize it was two different links. I'm so sorry. So
yeah.
everybody, I apologize for being so late. And I have a bunch of
Oh,
fun
what am I
stuff to
doing?
talk about
That's my.
today. So,
Sorry, I didn't mean to be showing you my email there.
oh
I'll
no,
stop
yeah.
sharing now. All
But
right.
this is awesome. So you guys, how often do you guys do this?
Every Friday at noon Pacific
Oh,
time.
very good. Oh, very
Yep.
good.
We've got many of the people that are in this group are interested in single family home rentals. There's a good portion of people that are interested in Airbnb. A
Okay,
lot of people are interested in real estate syndication as well.
perfect.
But actually, I know you may not be prepared for this, but since you're a lawyer, there have been a lot of people that have had LLC questions as well recently. I don't know if you want to
Well, I
potentially
will
take
talk about
those.
that. Yeah, you know what? I put together. I have a private money rockstar presentation, as I sent to you. But in that presentation, and that presentation is really, it's not like explosively difficult to understand. It's a simple, fun presentation. But in the middle of it, I have a little bit of a discussion about an LLC, and we can go into more in depth about that. And I also know you and I originally talked about Last Life Ever, and I would love to talk about that. And then I also want to talk about why real estate investing is so important to
Mhm.
me from not just a money perspective, but from a life perspective. So, yeah, love to
Sounds great.
talk about
Sounds
all
great.
those things.
I want to emphasize too your Last Life Lived podcast, which everybody
Yeah,
can go subscribe to, and it is. I love that it's the fact that you have personal stories there of people who are living their best life.
yeah, absolutely. That's exactly what it is. So, I will. Yeah. So, what do you want me to do? Do I have a way to share my screen? Can I share here?
Yeah, you should be able to share your screen, and
Awesome.
if people have questions, you can ask them as we'll go along. I'll moderate the chat so Jillian doesn't have to and bring the questions to her. And I encourage people. So actually, Jillian, how much do you want us to stay on the topic of your presentation, and how much are you like? A month or so ago, we had a question about what is a series LLC.
I will
Are
answer any of your questions. This is,
okay,
yeah,
great.
absolutely. I have no preconceived notions about, you know, this. So I'm happy to answer any questions you guys have. I'll just give you a little background real quick. So actually, I'll do my presentation because a lot of my background is in there. But before I do that, I'll just show you our Facebook group. This is our Facebook group, the Last Life Ever Facebook group, and this is the a podcast slash support group, for lack of a better term, accountability group that myself and a gentleman by the name of Jeff Holtz started. And Jeff is actually a real estate investor himself. That's how we met in real estate investing. But he's also a former attorney. And I don't want to tell Jeff's story so much because it's his story to tell. But he had a life event that made him go, that he just knew he didn't want to waste any more time um, on law or in a job that he didn't like or in a job that wasn't as fulfilling. And so that's when he decided to become a real estate entrepreneur. And one of the things we do up here at the top, we have an announcement about our book, The Coronavirus Collective, which is a collection of stories. You can get it on Amazon. The proceeds from that book actually benefit 4 different charities. But another reason why we created Last Life Ever is because we felt there was a gap in the market, if there is such a market. But we felt there was a gap in something for specifically Gen Xers. We're getting to a point in our life, and I don't know how many people on here are Gen Xers. I'm assuming most of you are. That we're getting to a point in life where we probably had some success, but there's a realization that there's got to be more out there. And so we bring on stories, human interest stories, that of people who are either ordinary people doing extraordinary things, extraordinary people doing extraordinary things, and then also ordinary people doing ordinary things. And you go, well, that sounds like everybody, Jillian, and in a way it is. But like for example, we had our most recent guest was a guy named Mike Burke, who was a big animal trainer at the San Diego Zoo, and he'd been doing that job since he was 16 years old. His wife died, and he decided to become a dog trainer so he could spend more time with his kids. And we talked to him, really to talk about how to train your dog in an effective manner. And we got into the story of him, leaving his job so that he could spend more time with his kids. And it's just kind of that human evolution that we focus on, just giving our audience ideas of how they can be better or how they can improve their lives. So how does that fit in with real estate? Well, because we feel like real estate is a means to an end, and that you owe it to yourselves to create, passive and residual streams of income, and that's what real estate really represents, is that it can provide you that income while you sleep without you putting in more, time and effort. So I'll just go over. If you guys want to join our Facebook group, we'll definitely take you. It's the Last Life Ever Facebook group. Our next little event is we're doing a virtual turkey trot on Thanksgiving. We would love for you to join us at a 5K. And we just do it from wherever you are. I know most of you guys, I think, are in Northern California. If you're feeling saucy, you can come down and see me in Southern California, and we'd love to have you, and you can come run with some of us. So let me share another screen over here. Share my presentation. Sorry, 1 second. Share screen. So that's just Jeff, picture of Jeff. So what I really focus on personally is I focus on how to get money for real estate. And the way I got into this is actually the picture you're looking at on my screen right now is a picture of my husband and his butt in front of a crowd in South Africa. And I realized, like, actually not too long ago, a couple years ago, that becoming a rock star is very similar to raising money for your real estate deals. You have to get a crowd to like you. You have to figure out what it takes to get that done, and then you have to really have, like, almost what I call a come to Jesus moment of figuring out, do you even want to do this? Do you want to have to deal with investors? Just like, does a rock star really want to deal with the publicity? And we've heard plenty of stories of rock stars who don't want to deal with the pains of being famous, and there is a lot of pains of dealing with investors that are similar in that regard. So like I said, I actually, how I got into real estate was, I was originally in the music industry. I used to run a record label. This is me guitar teching for my husband at the time. And I used to dress like Tom Hanks. If you guys remember this old Saturday Night Live skit Tom Hanks did on Wayne's World, where he was Aerosmith's roadie. And I used to dress like that all the time. And it would aggravate the living daylights out of my husband because he just felt like I wasn't taking things seriously. But I thought it was hilarious. So what happened was, though, we ended up having like no money at all. Like, we were on tour, and my husband was playing in front of these huge crowds and opening for like these huge bands, like Sum 41 and the Foo Fighters, which, Foo Fighters are still a relatively big band, but this is like back in the 90s. And so he was open for all these big bands, and all this great stuff was happening, but quite frankly, we weren't making any money. And that was very depressing to me because it's, you don't like living off the dollar menu at McDonald's. So we ended up, I ended up getting my butt into law school, back into law school. I had actually dropped out of law school to do this whole rock and roll thing. And I just kind of reached the low point where I just felt like, okay, I'm not sure we're getting anywhere. I'm going to go back to law school. And I went back to law school, but even in law school, I realized, okay, I need to really figure out how to get into real estate. That's what I have to do. Real estate is where you can really make money, own assets, touch and feel, the things that you're invested in. Unlike, a lot of times, like when you invest in stock, there is a lack of touching and feeling and having control over it. With real estate, you can have control over it. And you can make it so that you're making money in your sleep, that you have tenants paying you rent, whether that's with self-storage or, multifamily or single family, whatever it is, you can make money in your sleep with real estate if you do it right. So I realized this and ended up going back to law school. But while I was in law school, I ended up going to every company at the time I was down in San Diego. I went to every real estate company I could find in San Diego, every real estate development company I could find, and asked them for a job. I had a degree in finance, so I would just offer to people that I would be their bookkeeper while I was finishing up my law degree. And there was this one company that was like, yeah, that sounds great. I like your entrepreneurial spirit, come on in and do books. And so what I ended up actually parlaying that job into was I did all the financing for the real estate company, bringing both the equity and the debt together and getting all the paperwork and all the due diligence and everything that goes into getting financing for a property into that into that deal. I'm sorry, I'm trying to prevent my dogs from jumping on my couch. It's very difficult. So I'm not very successful. I should have probably paid more attention to Mike Burke's dog training thing the other day. So I ended up doing this for a long time until really, quite frankly, the market fell out, and this was obviously back in 2007, and the market was about to fall out. We actually got rid of all of our properties, and then I decided, all right, I'm going to start practicing law. And what I started doing was representing companies in helping them figure out how to raise equity for their deals. And so that's primarily what I talk about, is how to raise capital for your deals. And so this is kind of just a fun presentation, a little bit of an overview. Oh, what happened? Oh, it's taking me to Wayne's World. Excuse me for 1 second. I don't need to watch that. All right, so I'm going to actually just skip through this. I talk about why it's important to consider money and equity, and I refer to the Beatles as one of the greatest bands of all time, and they have if you have take away any one of these Beatles, just for example, let's take away Paul McCartney, and you take a look at their, greatest album of all time, Sgt. Pepper's, and taking away Paul McCartney leaves you with this many songs on Sgt. Pepper's. So it doesn't look so much like the greatest band of all time anymore. And that's similar with real estate. You take away the money and you start taking away properties for your portfolio. So this is why I think it's really important to consider raising money from other people, because it's going to give you the opportunity to expand your portfolio. So it's something to consider in building your real estate portfolio. So how do we do this? How do we start raising private capital, or at least be prepared to raise capital from outside investors? And one thing you want to do is have a plan. Like, a band can't be a band without songs. You can't be a real estate company without a plan. So you want to find your niche. And I heard from the beginning Daniel saying, like, some of you are looking at single family, some of you are looking at multifamily, some of you are looking at self-storage. I will tell you right now, there isn't I don't think there's a type of real estate I haven't invested in. And there isn't a type of real estate out there that you can't raise money for. So I'm sorry, I'm looking at the pop-ups, and I know Daniel said he was going to monitor the chat. So the things I want you to consider, though, is where do you really want to be focused? What gives you passion? What do you think is the easiest for you to do or to manage? For example, I have clients who were in multifamily, and now they're strictly self-storage because they don't like dealing with tenants and toilets. And self-storage is a great way to not deal with tenants and toilets. I have other people who are passionate about multifamily because multifamily, they feel like they're providing homes, they're providing nice places to live, there's higher income clearly with multifamily. I have other clients who focus strictly on mobile home parks. So, these are kinds of the things you want to think about, like what works for you, what's your niche. And maybe your niche isn't necessarily an asset class, but a geographical location, or a customer type, a client type, whatever it might be. So those are things you want to consider when writing down your plan. All you want to do is bullet point that plan. You don't have to get too fancy with it. You don't have to get wild with it and get all superlatives and adjectives and all this stuff. Just bullet point the plan, and perhaps find a partner. Captain and Snail, they were great partners. All right, I had a whole joke there, but I'm just skipping over my jokes because I can't hear any of you laughing, and that makes it no fun. The next thing I want you to consider when going out to raise private capital is building a team, or even just running your real estate company in general. You really want to consider a team, and you will play more than one of these roles when you're first starting out. But it's really important when dealing with investors that you have a team together. Just like a rock star needs a band, you need a team. So one of the things I always say when I talk about the team, the most important person on this team is your bookkeeper, period. Your bookkeeper is going to be the most important person that you have on your team. And the reason that they're the most important person is because without the bookkeeper, none of these other people can do their jobs. Your CPA can't do your taxes. Whatever the attorney does is for naught because it doesn't matter, because if the books are messed up, that's it. Investor management, if you have investors, the investor management can't report anything to the investors if the bookkeeper hasn't done their job. And again, marketing and technology don't make any sense if your books aren't nice and tidy. So consider that. The next thing I want you to do is to develop your rock star image. First thing you want to do is to get an LLC going. This is how we're going to get your company going. And I'm going to talk to what your LLC should look like. I'll talk about where you should form your LLC in the next slides here. And then surrounding that, your marketing, your image, your messaging, your story. Who are you? Who do you want people to believe you are? And be that, and consistency will rule the day. So you consistently want to get out the same marketing message out there. I am a multifamily investor. I am a single family investor. I am, whatever that messaging is, get that messaging out there. And this does not mean fake it till you make it, because we know what happens when you fake it till you make it in the music business. I hope you guys get that joke. Some of you may not. Okay, good.
There are people that are old enough to get it.
Good. So for those of you that don't get it, I'll explain real quick. Milli Vanilli was a band from the 80s or early 90s, and they were caught lip syncing or not singing their own songs, and they were rushed out of the music business. It was actually kind of a shame because there's a lot of people who lip sync. The most important thing, do you have a clear and consistent marketing message for your real estate company? Regardless of whether you're raising capital or not, this is important advice for running a real estate company as it is. Do you have a clear and consistent marketing message? Because the minute you start getting these clear and consistent marketing messages, guess what? Buyers and sellers, not just investors, want to start dealing with you because they have some kind of level of familiarity with you. You built up trust by building up a brand. And I'm not a huge fan of Kiss, but boy, do they have a recognizable brand when it comes to the music industry. Everybody knows what their logo looks like. As a matter of fact, this font here is the KISS font, if you will. And these guys are like in their 70s and they're still wearing this stupid makeup. So, all righty. So, so if you're going to go out and syndicate a deal, and what I mean by syndication is go out and raise money for one individual property. The way you want to set this up is you're going to have a manager LLC, and this is where you and any of your, partners, your active partners will reside. And then, hold on, little laser pointer. So you're going to be in this manager LLC, and this is not just you, but also any of your active partners. That manager LLC is going to manage another LLC, which will hold a property, and your investors will invest in that property LLC. And that's how we keep it all nice and neat. So the next question I usually get is like, well, where would I create these LLCs? And the answer is it depends. So I'm assuming most of you guys are in California. You're all in Northern California, right?
There's a good group in Portland, Oregon, and also down in Arizona, and people throughout the U.S.
Yes. Okay. So I'm going to tell you guys this, especially if you're in California. The state of California, believe it or not, always wants their pound of flesh. So if you're a resident of California and you're not going anywhere anytime soon, it's very likely that you're going to have to create this manager LLC in the state of California because the Franchise Tax Board wants their money. However, if you're not in the state of California or you're planning on doing business all over the country, the other option you can have is that you create either a Delaware, Wyoming, Nevada LLC. As far as your property LLC is concerned, this LLC, especially if you're going to have leverage on the property that you're buying, is most likely going to be created in the state where you're acquiring the property. The bank most likely is going to require that you have an LLC that's in the same state as the property as the acquiring entity. So that's something to consider. Now, I saw something pop up about series LLCs on the question, so I'll address that right now. A series LLC is useful, particularly if you're dealing with single families. But let me forewarn you that the state of California specifically does not recognize series LLCs. So if you're having a series LLC, you really need to make sure that that state where you're operating is going to recognize the series LLC itself. For those of you that don't know what a series LLC is when you create one LLC and then you can create cells off that LLC and get separate EINs and separate bank accounts and hold separate assets and have the liability protection without necessarily creating a whole new LLC and incurring the cost of creating a whole new LLC. You can create a series LLC in Nevada, Texas, Delaware, Illinois, and Tennessee. Although I'll tell you right now, I usually only create them in Nevada and Delaware. They're the easiest there. So that's really, if you're considering doing a series LLC, most of the time I see them being used for mostly for single families and packages of notes. I don't know how many people in here are note investors, but I'm going to tell you that if you've ever thought about investing in notes, now's the time to do research on investing in notes, because I have a feeling we're going to be flooded come March 2021. We're going to be flooded with a whole new opportunity to invest in notes and buy notes on pennies on the dollar from banks. And if you want to test my theory, what I would love for you to do is just go on like Zillow Zillow, not so much Redfin, but go on Zillow and just, search a certain zip code and then hover over, look for the pre-foreclosures in the area. And you're going to see there's quite a bit, and they're going to be ticking up every day. And those will eventually turn into foreclosures, will eventually turn into notes held by the banks. Yes, Daniel.
Yes, Jillian, we have a question from SB, and he or she is asking, can I have an LLC for investment primary investment or primary property which has a mortgage from the banks. I was told that I was not allowed to have houses under an LLC if you have a mortgage on them.
No, that's not true at all. It's just a matter of whether first of all, if you're investing for investment, or excuse me, if you're purchasing properties for investment purposes, like not your primary residence, in other words, you do not want to be holding anything in your own name. You definitely want to hold things in your LLC for liability protection. The bank will allow this if it's a special purpose entity that only holds that property. That's the thing, right? So see how this says property LLC. You want this LLC to only hold one property. And that, actually, let me go to the next slide, because that's also what we see in fund situations, right? If you guys ever hear or have invested in funds, what funds are doing is they're not investing straight into properties. They're actually investing into property LLCs, and then the property LLCs themselves own the property. So yeah, no, you want to always try to own your properties in individual LLCs for liability protection. Oh, you're welcome. Okay, so if we're going out to raise capital, and again, you can apply this concept not just to the raising of capital, but you can also apply these concepts to going out and building your real estate business. You want to go out and get gigs. Know what they're doing, who they know, like, and trust. Investors likewise want to deal with people that know what they're doing and who they know, like, and trust. So the way you can get people to know, like, and trust you is to go out and do what I call getting gigs, speaking engagements, share your knowledge, start a podcast, hire a marketing company, go out on Facebook or Bigger Pockets or wherever, and if somebody asks a question that you happen to have some knowledge on, answer the question, and just start getting out there so that people get familiar with you and your brand. Engage in social media, find media outlets. There's a website called hireareporter.org, I think it's called, or it's just, if you just Google search hire a reporter, or no, excuse me, not hire, help out a reporter. It's Haro, Haro, help out a reporter. I screwed that up somehow, but it's help out a reporter. And what you do is you sign up for their mailing list, and they'll send out emails, like daily emails, that say, hey, a reporter's looking for a quote on this. This is a great way to get press. So if you're trying to build up your real estate brand, great way to build up your real estate brand is to engage in with these reporters and give them, the content that they need to get things done. Okay. So you can go from one person to, having a big, huge crowd. That's how rock stars start. That's how real estate companies start. It's no different. So when you're going out to raise private capital, you actually have to have legal documents for investors to read, private placement memorandum. And by the way, I don't want to just talk about this from a perspective of you guys going out and raising capital. Let's talk about this from a perspective of you actually investing passively. If you guys are like, hey, I don't want this real estate stuff. I like my job. My job's great, but it also takes a lot of time, and I have family time, and I really don't have time to be a principal in a real estate operation. Perhaps, though, you still want to be in real estate. Well, one way you can still be in real estate is by investing passively in other people's deals. And so whether you're investing passively or you're going to raise capital, these are the documents that you need to be looking for or you need to have. So the first one is called a private placement memorandum. If somebody asks you to invest and they don't provide you with these documents, that is a great reason not to invest. So the private placement memorandum is the story of the investment. It's actually a depressing story of investment. It tells the investor all the what, where, who's of the investment opportunity, but it tells it in a very depressing manner, right? And we'll get into that. I think I have some slides regarding that. So we'll get into that here in a second. Before I just ramble on here. So Yeah, so we'll talk about that here in a second. So private placement memorandum, then followed by an operating agreement. So the private placement memorandum is the story, but then the operating agreement is actually the legal document that binds you all together, that actually tells you, legally speaking, how the company's going to run and what everybody's expectations are. Then there's the subscription agreement. So I kind of skipped over bylaws or SAFT. The reality is that if you guys are all in real estate, you're all dealing with operating agreements because you're all dealing with LLCs. So the document you're going to get is an operating agreement. In some circumstances, in some very limited circumstances, you might get a limited partnership, and that's a partnership agreement that looks just like an operating agreement, same thing. The subscription agreement is the agreement that your investors, or if you're the investor, sign saying, I've read all the documents, I've read the PPM, I've read the operating agreement, I understand, and I'm willing to get into this deal. I want to get into this deal on the terms and conditions you've presented. And then finally, if you are raising capital from outside investors, you have an obligation to file something that's called Form Ds. I wouldn't worry about that too much right now. Just be aware that that's out there. So under the law, there's 3 different types of investors. There's, let's see, well, there are 3 different types of investors. Oh, that's a good question. I just saw that one about Prop 19. I'll answer that in a second. There's 2 different types of investors: unaccredited, not so smart, not so rich. Sophisticated investors, smart but not rich. Accredited investors are our highest and best investor. These are people who make $200,000 a year as individuals, $300,000 a year as a married couple, or $1 million in net worth. And they recently expanded this so it also includes people who hold certain broker-dealer license, like Series 7, Series 63, and Series 82 securities license. But most of those people are accredited anyhow, so it doesn't really expand it all that much, but it's there. Now, it depends on what statistic you look at, but accredited investors make up anywhere, it's probably like 10% of the population. So 10% of the population is accredited investors. So everybody else is either sophisticated and unaccredited. They start at the basis of being unaccredited, and then some of those people who are unaccredited may be sophisticated. Accredited is objective, right? We know you either are or you aren't accredited. You either make $200,000 a year or you don't. Like, there is no, justification one way or the other. You either are or you aren't accredited. It's that simple. With sophistication, however, it's subjective. Subjectives, the test for being a sophisticated investor is someone who understands the risks associated with investing. And so that just means, like, what experience have they had in order to develop that knowledge? And therefore, it's very subjective. So if you're accepting investors, you have to be very mindful of that. You have to be objective about this very subjective test. And then unaccredited investors are our most protected investors under the law. So this is why we have these categories, because the law actually treats each of these individuals differently. So if you're going to invest passively, you're going to be looking at mostly these 2 right here, 506B and 506C. These are private offerings. These are what private placement memorandums cover. If you're looking to do, like, quick small deals right now, you can invest in crowdfunding. They just changed the rules on crowdfunding. You can now raise up to $5 million, but actually that rule doesn't take effect till January. But crowdfunding allows anybody to invest on a registered crowdfunding portal. Usually, like I said, smaller deals because it's only $1 million right now. And then 506B and 506C are our private deals. And then mini IPOs are those Regulation A's. So if you've ever heard of a company called Fundrise, they do Regulation A's. Realty Mogul does Regulation A's. Grant Cardone does Regulation A's. Those are all mini IPOs. So that's something to consider if you're looking at investing. These are the rules. If you're looking to do a deal, you're probably going to do 506B or 506C. Also, you may have heard the term Regulation D. You think about the laws of tree, there's Regulation D. And then these two rules are under Reg D. Okay? All right. Just skip a couple of these slides real quick and go to. All right, so if you're an investor, and if you're an investor or if you're raising capital, as an investor, you should have the expectation that your sponsor, the thing you're investing in, they're reporting to you on a timely basis. And then they give you reasons to invest with them again. Like, and I want you as an investor, as a passive investor, to hold the sponsors that you invest with their feet to the fire. If they tell you they're going to give you quarterly reports, you best check on the fact that they give you quarterly reports. If you're not an investor, but rather you're raising capital from investors, what you need to do is make sure that you're providing those timely reports. So let's talk real quick on what should be in your PPM if you're raising capital, or what you should be looking for when you're out there trying to invest in some of these deals passively. And it's just like a reporter: who, what, where, when, why, and what could happen, all the bad things that could happen. So who are the people who are taking your money? Who are the principals of the company? What's the company? Where was it formed? Who's the management company? Remember that like org chart we had at the beginning? You should know all these players. And what kind of investors? Who are the investors that can invest? Can sophisticated investors invest, or is it only for accredited investors? And how many of them can invest? What are we investing in? What will your money be doing? What will the investors be getting as a return on investment? And by the way, guys, don't offer more than you have to, and don't offer too much. There's just no reason to do that. And investors, be wary of the sponsor who overpromises. If you're seeing like, I'm going to give you 22% return on investment, be really, really wary of that. Where is your money going? Are you the sponsor going to take any compensation? Are you raising enough capital? Are you going to have enough capital? Where is the money coming from? Are you going to bring in money just from investors, or from financing, or from both? Are you going to be getting money from the cash flow or the disposition? How are you going to pay returns? When will the investors get their money back? When will distributions start? Like, let's take, some of you mentioned single family. If you're raising money for single family and they're flips, you cannot promise returns on day one. It's not possible. You have to rehab that property and then either flip or rent the property. So if you start telling your investors, I'm going to start paying you distributions right away, that's just not possible or feasible. And as an investor, you also have to look, is that possible or feasible? So just be honest and open with your investors about when distributions will start, when the property will be disposed of, when construction will be done. And this is, and make a basic timeline of my expected milestones. I just heard Daniel, did you have something?
Yeah, I was going to ask, how much of this applies to a joint venture? So, say for instance, I'm an individual investor. I find a really good rental house or Airbnb or a triplex or something, and I want to invest with maybe another family member, and we're going to joint venture in order to do this. What's the comparison?
Okay, so that's a great question. The comparison is maybe you don't spend as much on legal fees, and because that's where the differences end. What you should be doing to protect yourself from a very uncomfortable Thanksgiving in the future, if we ever get to have Thanksgiving again, right? But is doing this. So like let's look at it from both sides of the equation. If you, Daniel, want to ask your brother to invest in a deal with you, and you're like, let's joint venture on this together, you bring in the money and I'll go find the deal. What you should be saying to your brother, who's basically going to be passive, you should be telling him all these things. Just write it out for him. Like, even if you don't go to a lawyer, and I suggest you go to a lawyer, frankly, and at least have them do it for you once, and then use that document again if you're going to continue to joint venture. but I would still provide this basic information. This is not rocket science, right? You can tell people when they're going to get their money back, when distributions are going to start. You don't need fancy legalese to do those things, but it will save you a lot of heartache if you have it written down in the event that something goes sideways or expectations are not what they should have been, or expectations weren't set appropriately during talks.
We've got a question in the chat here, and this is from Patricia. She's asking, is an LLC enough when it comes to asset protection, or do I need an umbrella policy?
Oh, you should get an umbrella. I'm not an insurance expert, and I'm also not an insurance salesperson, but I'm of the opinion you should always get an umbrella policy. They're cheap. They're easy to get. I would definitely get it. I mean, like, it's an umbrella policy is like $200 a year. Well worth it. If that helps. I have an umbrella policy.
Yeah, we have no other questions at the moment, but I know there are people out there that have legal questions. So go ahead and put them in the chat.
Please, yeah, definitely ask away. That's what I'm here to. I don't get a gauge on what you guys are liking or not liking if you want to ask a question. All right, so yeah, and so that's basically it. So these are all the things you want to tell. So again, how do you want to really build your fundraising? Even if you're dealing with a joint venture, right? A joint venture is more likely to invest with you if they know, like, and trust you. And they're more likely to know, like, and trust you if you give them reasons to know, like, and trust you. So you want to start going out there and providing value, giving people information about real estate, telling them what you know, telling them why they should invest in real estate in general, not necessarily with you. Build your list, go out, test what we call testing the waters, test what investors like, what they don't like, what they respond to, what they don't respond to. And with that, I'll take any of your questions regarding real estate, investing, LLCs, raising capital, types of properties.
All right, we just got 3 questions in really quickly here. See, Mike is asking, do you always recommend LLCs in all scenarios, even if my portfolio is small, like one single family home?
Okay, so that's a great question. And so it's fine if you just have one single property. There's probably nothing it's going to happen there. But if you really want to build on that, what I would start with is getting an LLC, putting that one single family property in there, and then start stuffing that LLC with assets until you feel like, okay, I might be risking some assets here, then open another LLC after that. I normally say, you can hold up to 5 single families in one LLC. You shouldn't have a problem. You had mentioned early on that Airbnbs. Airbnbs, I always recommend you put in separate LLCs or in a series LLC in a separate series, because those have more liability attached to them, just because you don't know what's happening in those Airbnbs. I actually invest in some beachside LLCs Airbnbs down in Texas, so I'm familiar with the Airbnb and the Airbnb model and doing that. I think it's a great model. It makes a lot of money when the timing is right and the market is right. So yeah, it just depends on what you're going to do with that single family. But especially if you're not renting that single family to just like on a long-term basis, and it's in an Airbnb, then you should be having that.
All right, we're starting to get some questions in here, and Dennis is asking, I've heard of people using an umbrella policy in lieu of an LLC in order to get a more favorable personal mortgage rate.
That's a great question.
Is that a bad idea? Is his question.
Well, here's the thing. What you can always do is get the personal mortgage, guarantee the mortgage yourself, and have it underwritten or, what have you, and then quit claiming to the LLC. Just make sure you're not violating the loan document, not accelerating the loan.
All right. Joseph is asking, I'm preparing to purchase a new home and convert my existing into a rental. Should I move this under an LLC? Tips on the process. And that's actually a question we've had quite a bit in previous sessions as well. How do I move something from my personal name to an LLC?
You just have to quit claim the title. It's not that hard. You just get a quit claim.
So with a quit claim is a deed, so you're basically deeding it from yourself to your LLC?
Correct.
Okay.
Exactly. These are
Cynthia,
great questions. These are
this
awesome
this is
questions.
a great question too. This is one I struggled with when I was first starting. Can I go into any type of bank and create an LLC? This property is in Colorado. So who do I go to create an LLC?
Oh, that's a really good question. And I'm sorry I wasn't more helpful on that. So if, first of all, if you need help with creating your LLC, let me type something up on the screen here real quick.
I would almost think that a comment on registered agents might be
Yeah.
for follow up on this question.
Yeah. So hold on one second. I'm going to give you, I want to show my screen. Pause.
Also, Jillian, we've got 6 minutes left. I did a little bit of Googling really quickly and I had trouble finding your podcast. I want to make sure you send your link to your podcast out.
Oh, yeah, absolutely. Just like if you guys, it's Last Life Ever. And if you go join our Facebook group, we live stream in there, the podcast live, and then it's up there forever. So you can check it out there, but you can also download it on Apple and Google. And we also are going to start developing our YouTube channel better, so it will be out there too. So follow us everywhere. Last Live, yep, that's right. So if you look at the bottom of the screen here, it says Clement at crowdfundinglawyers.net. If any of you need help creating an LLC, she'll help you out. And then also, if you guys just want to do it yourself, Colorado is actually a super easy state to create an LLC. All you have to do is go to the Secretary of State in Colorado, and you can do it right online. It's like $50.
All right. GRE Wirtz is asking, what is the maximum number of properties you would put in an LLC? And Don is also asking, do you recommend an LLC for each property or for each state? So kind of, what are your grouping thoughts?
Okay, those are loaded questions, and here's why. Because it depends on the properties. And one thing I want to encourage you guys to do, I don't have anything for sale right now, so I'm going to have you go to, again, Facebook. I'm huge in Facebook because it's just easy to communicate with people, right? So if you look at, or go to Facebook and Google search or Facebook search, multifamily war room private group, join this group. We just started it. It's myself and another attorney. The other attorney is a guy named Charles Dobbins. He's in Boston area, and he teaches people how to buy multifamily properties. And we have a lot of this kind of information. So if you have a question after the fact, you probably find it coming up in multifamily war room. Again, nothing for sale right now. We do have things for sale. I don't want to mislead you, but we don't have anything for sale right now. So go check that out, and hopefully we'll be able to answer your questions after the fact. But to answer the specific question about how many properties in an LLC, there's no magic number, right? I recommend that you don't have any more than 5 single families in one LLC for liability protection purposes. But the reality is you are not going to be allowed to get financing on any kind of commercial property where there's more than one asset in the LLC. So you need to consider that you should have individual, like, self-storage facilities. If you're getting financing on it, self-storage facilities, multifamily facilities, whatever, those have got to go on in their own singular LLC, period.
And we I guess momentarily forgot about this, but your thoughts on Prop 19?
Okay. Oh, Prop 19. So that was the one where they said, like, people who had their homes destroyed by the fire could take their same tax base and go somewhere else, right?
I don't know. I'm not in California.
Oh, sorry, Daniel. Why I thought you were. Yeah, changing property tax rates. Let's see if I remember this right. California voters have narrowly passed Prop 19, a measure expanding property tax rates for older homeowners, closing tax loopholes on inherited properties, and creating a new firefighting fund. Supporters say the law will encourage empty nesters to downsize, bringing homes to the market and easing the supply shortage in places like the Bay Area. Yeah, I believe I voted yes on this. You know, I have weird thoughts on it. I thought Prop 13 was a good one, and then I've had other people who've argued with me that Prop 13, you know, just makes it so that the rich stay rich, and you know, all the younger generations pay for things. There's probably some level of truth to that. Um, I don't know. I voted yes on it. I don't feel very strongly one way or the other about it. And I think it's only fair to say, like, if your house has been ruined by a natural disaster, that shouldn't mean that you should pay higher taxes. I'm interested in what other people think about that, though. So
Okay. We've got 1 minute left. Why don't you just give out your contact information and people can reach out to you?
Absolutely. Hold on 1 second. I'm gonna share. I'll share my content. I'm gonna share my screen again. And if you look right here, this is my email address. Jillian at jilliansedodi.com.
I think your browser is being displayed right now.
Oh, sorry, about Prop 13.
Multifamily War Room is on the screen.
Okay, hold on 1 second. How about now? What do you see?
Yep, now we see it.
All right, perfect. So Jillian at jilliansedodi.com is my email address. You guys feel free to email me anything. Check out, like I said, Multifamily War Room. Definitely check out Last Life Ever. Nothing for sale for there. That just loses me money.
Jillian, thanks for coming on, and this was a whirlwind tour. I wish we had a little more time. It's gone by very quickly.
Yeah,
but thank you for coming in.
I'm sorry for being late. Thank you guys so much for having me. Please email me. I love hearing from all of you. And if you need a LLC created, just email Clemen at crowdfundinglawyers.net. She'll help you out.
All right. Have a great weekend, everyone.
Thanks,
Bye-bye.
guys.
Thank you. Have a great weekend.